Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. Welcome to Bloomberg Brief. Let's set that agenda.
Powell is in the spotlight. It's day one for the Fed chair as he testifies before lawmakers growing impatient for interest rate cuts. NATO leaders head to Washington for its 75th summit as global election turmoil overshadows its mission to show strength and unity. Finding a path forward, Boeing faces yet another incident while grappling with its guilty plea. Good morning, Manus.
Danny, a very good morning. Book your profits, say Citi. Mike Wilson 24 hours ago said these equity markets could have a 10% drawdown in them. A correction is highly likely. Then you look at what Citi are saying. AI exposed equities. There's a risk of a bubble. No shock there that people are going to call that. But when it comes to the flow of money, Goldman Sachs, Rubner over there says buyers are out of ammo. And I'm on the lookout for outflows in August. That's the next leg of the stool, maybe to come under pressure. We go into earnings season. You've got banks hitting the tape on Friday. So, again, it's going to be a high bar to beat there. Intel, furiously higher this morning, up 4.3%. It was up as much as 6%. You've got TSMC making $1 trillion valuation. All the chip stocks moved a little bit higher yesterday. Piper Sandler have an interesting note out talking about the size of the GPU business being $400 billion by 2027. So, again, there's fuel to the elixir of life within the chip story. Tens, you've got $58 billion worth of 3-year notes coming down the pike. But term premium, go on the term premium. It is back. It's almost on the plimsoll line of zero. So we've rallied in terms of term premium. Is there enough term premium to tempt you in? I put BP in here because they've made an announcement this morning in the United Kingdom that they're going to take a hit of up to $2 billion in terms of their exposure on the refineries in Germany. Stock down 3.39%. I'm excited for earnings season. Good morning, Danny.
You have to wait until Friday, Manus, until earnings season starts in force with the banks kicking off. It is a busy week until then. Today, as we've been mentioning, is the start of Powell's testimony. And I think it takes on more importance than it usually does. Usually the congressional testimony, you hear the same sort of language. But Powell now has another data point, and that is the jobs figure, unemployment at 4.1%. This is the question. He's talked about the reaction function being really dovish, that should there be cracks in the labor market, that they would act and they would cut. Is this enough? Is he going to acknowledge the weakening in this labor market? Because right now, the summary of economic projections has labor markets coming in, has unemployment falling. And that's not what the trend has been.
I would say these politicians are going to be pretty aggressive. This is going to be the last time that you're going to officially see Powell in front of politicians before the election. They're going to be chomping at the bit to go at him from all sides. This is what Paul Donovan wrote overnight. And he talked about the fact that he's not a PhD, he's not an economist. Powell has tended to focus more on the issues politicians care about and less on what the independent central bank should worry about. And of course, what you're going to hear here is it's the argument. If your inflation is lower than Europe, why are you hanging on? Well, it goes back to the 1970s. They don't want a 1970s redux. If they're data dependent, how reliable is the data? So I think he's going to be salvoed from all sides.
Yeah, I mean, this is a criticism that you hear a lot against Powell, basically saying, look, the man is trained as a lawyer. He's not an economist. One could say the same for Madame Lagarde, potentially, too.
But she's doing a fine job.
But look, he's got a lot of people on his side. And that's why you listen to people like Williams, who takes on an increased importance because they do have that economic background. But the thing is Powell can be as dovish as he wants. We're also going to hear from Bowman today. If there are those hawkish members of the FOMC, especially if we're in election year, does he need to get basically everyone behind a rate cut to say, OK, that's why we moved? Or else does it start to sound political if you don't have everybody on side? And I think that's the risk right now.
Well, the Doves are in the ascendance at the moment. They have got Mary Daly talks about a tipping point. You've got others, Goolsbee also going down that road. So the narrative is shifting behind. He's got a fair wind behind him in terms of the disinflation narrative, and that's what our guests have said over the past couple of days. The disinflation is perhaps a little bit more than we all anticipate.
Right, and Ed Cole of Man Group writes something similar about this, Manus. Yeah. He says a much clearer disinflation trend is now evident in the U.S. To me, that's at odds with the caution that the Fed is still telegraphing. Perhaps that is a precursor to bringing back the hard landing conversation that was so prevalent at the end of 22. Time will tell. Ed joins us now, who is the head of multi-strategy equities at Man Group. Ed, it's always a pleasure to talk with you. And I think that's so prescient ahead of what we're going to hear from Powell, because the doves are louder, but they're not saying it's time yet. So what is the risk of a policy error at this point?
I think policy error is a bit rich. I think that Manus put it well, which is that, there's a degree of caution which is probably warranted to prevent any kind of resurgence in inflation that could bring back the spectre of the 70s. My sense is that, if you're trying to ensure the Fed's independence, that what you have to do is take your mandates extremely seriously. Since November last year, we've started to have a little bit more symmetry in how the Fed talks about its mandate. So we had that kind of pivot at the end of November where Powell started to talk about policy being restrictive. And it started to be a bit more obvious that they were thinking about those dual mandates in a slightly more symmetrical way. My sense is that we'll continue to hear Fed speakers being a little bit cautious, or Powell in particular, particularly today in front of politicians. But the trend is becoming increasingly clear. For markets, it's fascinating because markets seem what's priced in today. Markets are assured that this is soft landing territory. And, we're going to start asking that question, I think, in coming months about whether soft is really soft or maybe if it's becoming a bit harder.
Oh, Ed, you've upset her now. But the question is whether it's a double soft, and whether then. So we're all assuming it's going to be 25, very symmetrical, 25 before the end of the year. But if that landing does become double soft or even incrementally harder, let's throw one out there before the election. Let's get 50 basis points in and get it away, or would that be the shock and indicate a panic?
Oh, I don't know. Yeah, I mean, my sense is that would be too much. You'd have to see a precipitous decline in activity data that at the moment is not that obvious. Now, as I say that, I'm conscious that typically what happens before recessions is things look fine, right? I mean, we had that pattern of things in the GFC. As far as I remember, I think the fourth quarter 2007 was 2.5% real growth. And then we dropped off a cliff. So, maybe they'll see something that requires 50. My sense is probably not. My sense is they'll go gently. Okay. I'm pretty bad, to be totally honest, on predicting anything, but in particular, predicting with any accuracy timing of anything. Oh. I think the important thing for markets is the trend. And the fundamental data that underpins the trend. And to me, that's quite clear at the moment.
The trend at this moment has been AI, NVIDIA over everything, Ed. I find it interesting, the issues that people are having, trying to get their heads around it, because it is scary when you look at the very thin leadership. Terry Smith over at Fundsmith had an investor letter out that FT got their hands out, and it basically said, we have been underperforming this market because we do not own NVIDIA. And NVIDIA, we have yet to convince ourselves that its outlook is as predictable as we seek. But then he goes on to say, outperformance has been difficult to obtain because we don't own this thing. So as a fund manager, Ed, how do you think about this? The uncomfortableness of just owning and being overweight NVIDIA, but the fact you can't really outperform this market unless you do so.
Yeah, look, I defending underperformance is a tricky thing as a fund manager. You have to kind of be a bit honest, but not too honest. I think I would probably offer a slightly different reflection on the opportunity set at the moment. What we do is market neutral, right? So we're in the pure alpha business, which is a job of trying to select securities that can beat other securities and play the spread between the winners and the losers. This has been a phenomenal environment for that. And I would say in the funds that I manage, in the multi-manager hedge funds that I manage, where I'm allocating capital to some really great PMs across Man Group, we've had a really good year. And we've had a good year with minimal or perhaps even zero exposure to NVIDIA. And actually, it's been an environment, a fascinating environment, and something that we suspected might be the case as rates moved higher, is that dispersion in stocks has moved quite a lot higher. So vol's been very low, but dispersion's been quite high, which really means you get rewarded for placing correct bets on winners versus losers. And it's been a much better environment for that than the period during very low interest rates. So I think if you're a stock picker, there's been plenty of opportunity. It's been interesting how that opportunity has been broad-based. We've got value managers who have outperformed. We've got growth managers who have outperformed. It's actually been a good environment. So I'm resistant to the idea that not owning one company can be a determinant of all of your year's returns.
Look, Ed, we've had you on several times, and this conversation seems to be the most understated bull that I've heard you be. And you talk about loosening regimes as being overwhelmingly bullish for equities and bonds. Are you equitably bullish on both. We've seen a steepening in the curve, a phenomenal steepening in the United States of America. I mean, are you latently a roaring bull or just a bull?
No, I'm latently a terrible pessimist, actually. I saved a little caveat in what I sent over to you so that I'd have something more interesting to say. I think the point about our analysis on loosening regimes and curve steepening is, yes, they're overwhelmingly bullish for equities and bonds. You know, this time is different, perhaps. Normally, when central banks cut interest rates, they do it against a backdrop of manifestly obvious weak growth, right? Mm-hmm. So you've typically got weakness in growth. You've probably got weakness in asset prices. You've got that sense of kind of, you know, pushing on a string. Everyone's so despondent. They think, is anything ever going to help if central banks cut interest rates? And then bit by bit, the loosening of financial conditions and monetary policy starts to support activity and the discounting of improved activity. It is a bit different this time. I mean, I'm worried again about a hard landing. As things stand today, there's not enough evidence of that. So what we can tell you about the pricing of rate cuts in Europe or the UK or the US is they're coming against the backdrop of pretty full inflation and activity data that looks okay, if not stellar. That's unusual. And therefore, it may well be that what I suggested about the exceptional rewards for bonds and equities in loosening regimes don't apply in a 2024 loosening regime that might be very different. Okay. My real preference here, to your question about kind of equal confidence, my real sort of preference here is actually bonds. But I'm an equity person. So how do I think about that preference in the equity market? And I think, you know, you gave in your intro, I was worried because I felt like you stole all my thunder, all the things that I think at the moment you cited. But actually, I agree with a lot of the speakers you referenced. I think we're entering a seasonally difficult period for equity markets. I mean, August and September are the only two consecutive negative months on average over the last 30 years. Off the back of July, which is on average the best month. We've had like $500 billion of ETF inflow this year. So loads and loads of really bullish things. You already mentioned the bar's high on corporate earnings, and I've said there's plenty of things weakening at the margin, not least some of the consumer data where credit card delinquencies in the US are picking up. And
it's certainly going to be a tough couple of months. Ed, we'd never steal your thunder. We just like the notes so much that we just thought we'd sort of put out the big, bold headlines for you there. Ed, good to have you. An equity manager who's bullish on bonds. You can't beat that with a big stick. Ed, thank you very much. Ed Cole there of Man Group, our guest this morning. Other stories trending on your Bloomberg terminal this morning. This is what we got for you. Shares in BP, as we said to you, have been dropping. The company warns of weaker oil refining and write-downs. BP sees significantly lower refining margins and says it will take up to $2 billion in impairments in the second quarter. Now, that figure includes charges related to the scaling back refining operations in Germany due to the high costs and the declining fuel demand.
Most of Houston remains without power in Tropical Storm Beryl's wake. Authorities warned the blackout may last for days. The storm flooded streets, downed trees, darkened traffic lights, and left power lines on the ground. 3 deaths were linked to the Category 1 hurricane.
President Biden says he's firmly committed to staying in the race, allowing his physician to share health details and quell concerns. Despite calls to drop out, he's won support from some progressives he once battled with. Meanwhile, Wall Street's most influential donors have lost sway over Biden, given his sizable campaign war chest. Context matters on Bloomberg.
It's your Bloomberg Brief. Danny Berger and Manish Krani in New York. So yet another hiccup for Boeing. United Airlines says one of its Boeing aircrafts lost a wheel while taking off yesterday, and that was nearly identical to another incident that happened in March. Joining us now is Bloomberg's global aviation editorial leader, Benny Campbell. Benny, I look forward to a day when we can stop talking about this. And of course, the reason we're talking about this is because it continues to have a black mark on Boeing with every single incident that we hear about. So what's happening with this latest one?
Yes, hi from Berlin. I mean, in all fairness, this is probably more of a black mark on United than it is on Boeing. It's unfortunate that it happened on a Boeing aircraft, but this is a plane that is out of production. It's been in the United fleet for a long time. So this is not something that, would be similar to what we saw in January when we saw this panel blow out of a brand new plane. That was very much on Boeing. In this case, this is more of a maintenance issue that has to do with United. Obviously, it's a serious incident. Luckily, nobody got hurt in this. But the bigger picture really is that the public, the flying public, regulators, everybody is acutely aware of these incidents. Previously, maybe a year ago, even 6 months ago, people wouldn't have cared much about these things. But now a lot more attention is on each and every one of these. And Boeing is kind of in the firing line, even when they are not directly to be blamed. So that's a difficult narrative for them to get out of. And they're trying to do their best. They've had a dismal first half of the year with everything that's been going on. But these incidents obviously don't help, because people will say, oh, it's Boeing again, when in fact it's more on the airlines than on the manufacturer.
Yeah, I mean, the preoccupation is with the cash burn, and now obviously having taken this guilty plea, what will their relationship with the government be? There's United Airlines down 3.4%. Let's just pivot to Airbus, because it depends what way you read these Airbus numbers. They've come in, they've had their best monthly deliveries of 2024, but does that mask, does that say that they've solved their supply chain issues, or does it simply mask over a bigger issue?
Well, very much the latter, Manus. I mean, this is something that will remain with them, these supply issues, for years to come. The CEO has said as much. We're talking about 2-3 years until this is properly fixed. Remember, they had this pretty dramatic profit warning at the start of last week, where they spoke of all the issues with the supplies. It's not a demand story, it's a supply story. Yes, you got the numbers yesterday from Airbus, 67 planes that were delivered in the month of June. That's a good number. It's the highest monthly tally so far this year. So it sort of points in the right direction. But they have a long way to go to meet their even reduced target for the year. Remember, originally the plan was to hand over 800 aircraft this year. Now it's only 770, and they still remain quite a ways away from that at the halfway mark of the year. So good news on the one hand, that the direction seems to be right, but still quite a lot of catch-up to be done in the latter part.
Okay, well, it's certainly feeding through to prices. I can tell you that from a very sore experience with my Amex card, which is one flight to Ireland. I can't even name the price. But anyway, there you go. It's called a lack of supply and bums on seats. Benny, thank you very much. Benedict Kammel in Berlin. Let's turn our attention across to retail. It's the attempt to rebuild relationships, the most important part in retail. But this is with the partners. Nike has brought back a retired executive to be the new VP of Marketplace Partners. Joining us now is Charlie Wells. So Nike tried to bolster and build their own shops, but it looks like they do need partners, and they brought back Tom Petty. Who is he, and what magic touch does he have?
Tom Petty is a 30-year veteran of Nike who is tasked with rebuilding those retail relationships. And this reads a little bit like a cautionary tale from an MBA case study, because we know that there's a cyclical trend in retail away from bricks and mortar and towards technology. But it looks like Nike just pivoted too fast into tech, projecting at one point that they could potentially bring in 50% of sales from digital. That never materialized, and they realized they need to rebuild those relationships, and that is what Petty is there for.
It's a difficult time for Nike. The CFO was talking at their last results, saying that they're feeling increasing pressure by the value customer, and they want to give out now a shoe priced below $100 that for Nike would be, relatively cheap. So how do they marry these two things? A brand that is struggling, trying to rebuild retail partners, and at the same time, Charlie, a consumer who is starting to feel some price fatigue.
Look, that $100 price point is something that they had shied away from. And I think a big issue here is going to be innovation. So you can innovate digitally, you can innovate and rebuild relationships with retail partners, but that innovation on product is what is so difficult. It's hard to get the price points right. And look, Nike's core, fundamental principle years ago was athletics first, and then the consumer will follow. So they would innovate on the court, and consumers would follow after that. They sort of missed a trick recently with that. They've come into 2024 without that innovation, and that could hurt them in the long run.
All anybody wants is Adidas Sambas, I'm sad to report. Charlie, thank you so much. Bloomberg's Charlie Wells. We'll have your top headlines next year on Bloomberg Brief.
Time for your front pages. This is what's making news headlines around the world. First up, we have a coalition conundrum in France. You've got Le Figaro leading with this. President Macron, the coalition is not found. Legislative election results prevents an absolute majority. The Left Alliance, far from the mark. Alliance centrists seem inaccessible.
This from the Wall Street Journal, Manis. They're reporting that a Russian missile has struck a children's hospital in Kyiv. At least 33 dead, more than 100 have been injured. President Biden has said that it is critical that the world continues to stand with Ukraine ahead of a NATO summit meeting.
Now, look, it's a story that we've both been tracking quite furiously. The FT leads with their interview with the billionaire David Ellison, Larry Ellison's son. He's got his hands on Paramount, and it is, what is he going to do? I think the title of it is this, Danny. It's going to be a media and tech company. So this is about the investment. Now we begin to understand a little bit about the size and the scale of the investment and what they're going to make Paramount.
And I'm skeptical. How many times have we heard this of media companies trying to become more tech-like, and it doesn't work? I mean, they have Paramount Plus. They've lost billions on this thing.
I mean, he talks about wanting to reduce the churn, use algos to keep you close to the brand. I mean, you could say that it's a pro forma script of what they're going to do.
Yeah.
And they're building studios in the cloud.
I wonder how much they're going to spend, because they cut spending a lot, and that didn't work out for them. So, you know, time will tell whether this time it works. From our global headquarters in New York, I'm Danny Berger alongside Manis Cranny. Let's set your agenda.
Powell in the spotlight. It's day one of the Fed chair as he testifies before lawmakers who are growing impatient for interest rate cuts. NATO leaders head to Washington for the 75th summit as global election turmoil overshadows its mission to show strength and unity. Finding a path forward, Boeing faces yet another incident while grappling with its guilty plea.
Somehow, in all this turbulence, no pun intended with the planes there, Manis, 35 all-time highs. Are we going to hit a 36? We're up by 0.25% for your S&P 500 futures. 10-year yield not moving anywhere fast, up by, let's call it a basis point. 4.28% is where we stand. It's the front end that's been under pressure as we gear up for Powell, as we did see some bond buying last week off the back of weaker economic data. Euro, that is very much so calm and settled this morning after European elections, after France over the weekend. But as the dust settles in Europe, Manis, I can't help but wonder if we start to take the cues of the narrative once again of interest rate divergence, especially because we're going to hear from Powell again. How dovish or not dovish will he be? Will he talk about this labor market? Will he talk about 4.1% and the weakening? Or does he just continue to reiterate, as so many speakers have, that we're not there yet?
Yeah, I mean, the narrative around unemployment and the dual mandate, everybody, you know, the furious focus has been on inflation and the disinflation narrative. But as you said earlier, does he genuflect? Does he acknowledge that softening? And what does that mean for the rates market? The rates market at the moment is going for 2 cuts. We just had Ed Cole from Man Group, and he is mildly bullish, and he's got 2 cuts penciled in there. He's more, but for an equity manager, he's more bullish on bonds than he is on equities. I loved
when you were like, you're kind of bullish. He's like, I'm a pessimist, Manis. You have to kind of caveat everything in this weird market where only one stock leads the way. You kind of have to say, yeah, I'm bullish, but I'm pessimistic.
But even on Nvidia, he said, he's got a minimal exposure, and we can outperform without that. But we can ask our next guest whether she's in the same camp. Speaking of which, our next guest says this about the horizon, and a little bit of context for you. Earnings expectations are fully discounted, and volatility from U.S. election. Potential greater economic slowdown from higher rates and inflation. Geopolitical risks are heightened relative to history. She is Stephanie Gould, the head of investments over at Robinhood. Good to see you this morning.
You too.
From that introduction, my sense is that we are perhaps underestimating the scale of slowdown and the pace of disinflation. It's something we've asked a lot of guests this week. We're going to get CPI, we're going to get Powell. So my question to you is the same as to everybody else. What scale of disinflation are you anticipating, and what scale of slowdown?
I think for scale of disinflation, you sort of just only talked about the risks. I do actually think there's like a balanced view out there. I think bulls and bears are sort of, neck and neck at the moment.
Okay.
and that's because of the tech super cycle on the other side of this. But from an inflation perspective, I do expect it to continue to fall, but be slow. And I think actually Powell acknowledged that a bit in the semi-annual report, which I'm sure he'll address today or tomorrow. That special section on housing, I think that's the thing that's kind of keeping inflation sort of sticky, and he's acknowledging that it takes a long time to kind of show up in the official numbers. And that's what I think will continue to happen. I do think the rate cuts, which I think they'll have one this year, I'm not necessarily on the same side as the market, although a lot of the data that we got last week actually helps. I think that's what moved expectations up. But I think we will get a cut this year, and I do think this kind of a couple of cuts will actually help lower inflation because it will kind of unleash a little bit of demand, I think, on rents, right? I think that will actually help the housing market and sort of cool the rental market.
I find this such an interesting point because, it's this madness of higher rates haven't really affected the economy as much as we thought.
Because there's so much stimulus.
Well, right, but then in that same camp, is lowering rates going to be as effective? Also, kind of to what you're saying, in terms of reawakening some growth, helping us avoid any hard landing. If, again, it's the stimulus out there that's been aiding the economy, how much more is, 1 basis point, 25 basis points, one cut, 1 basis point would be literally nothing. But how much would that really do to kind of avoid any type of undue weakening in this labor market?
I don't think it's going to do very much. That's why I think they can cut a little bit to acknowledge the fact that inflation is not nearly as high as it was. And I think you saw it with the ECB, right? They cut once. And then you had a note put out saying we're not sure if we're going to cut a lot more. And I think Powell should wait until he can cut a couple of times rather than one and then see how it goes.
How much tolerance is there, though? The markets have been at loggerheads with the Fed pretty much the whole way through this. Okay, they were brought to heel from 6 cuts to 2 cuts over the past couple of months. How impatient will the politicians be today?
I think they have to pander. I think they have to show their constituents that they care about them. And it does matter. Interest rates have affected the everyday consumer quite a bit, especially the housing market, right? People cannot buy houses. The housing market has stayed where it is from a price perspective because people have low mortgage rates. I think it's something 2/3 of mortgage rates out there are below 4%, which you can't get today. So I think they're going to have to, ask a lot of questions about this.
So you mentioned earlier that basically some of the oddities of this market have to do with AI leading. But if you look at the rest of the market, there are some pretty boring consumer staples that have done well too. Costco, Walmart, Kimberly-Clark, all of them up more than at least 15%. What does that tell you about the contours of the market, that if we're not buying tech, we're buying safety?
Yeah, I think if you look at outside of the tech space and comm services space, the economy is starting to slow down. The consumer has slowed down. We've seen that, right? In the consumer discretionary space, in the retail sector, a lot of those companies are we're going to put out value menus. We're going to put out ways to give you discounts. Places like Target and Walmart have said the same. So it's showing that they're listening to their customer base, and the consumer is being more discerning about where they're spending their money. Inflation is they are ground zero for inflation.
But then this is the bifurcation in terms of, who's hurting the most on higher interest rates and on mortgage rates at that price and inflation. And it is those people perhaps at a different income point relative to the wealth enabler or the wealth holders and the wealth builders. Look, we've got a whole host of notes with Mike Wilson 24 hours ago saying, there's a lot of fully valued markets here, 10% drawdown. You got Citi saying book your profits, AI exposed tech. A 10% drawdown, I'm just sitting reading these notes and I'm thinking, actually, I'd probably welcome a 10% drawdown at this stage because it might just give us a little bit of a draw for breath. That then when the rate cuts come, you have got the opportunity to get into perhaps those higher concentrated areas of the market that are so rich and so expensive at the moment. I'd welcome a 10% drawdown.
I actually think it's very normal. If you look back in history, I think over the last 50 years, something like 36 out of those last 50 years, you've had an average drawdown of more than 10%, even when their markets are up for the year. And that's normal. Volatility has been extremely low, and I think I would welcome some volatility too. Typically, September is the worst month in the year, and so that may be coming. And I actually do think we'll get a little bit of a correction, but I still am pretty positive for the year and for next year.
Okay. Before we what's the one thing that could actually cause that 10% drawdown quickly?
I think it's just expectations being very high.
Okay, we're overpumped. Okay, there you go. Stephanie Guild of Robinhood with her view. It's going to be a tricky September for us. The Turkish Sovereign Wealth Fund is considering a stake sale of over the 26% holding in the country's largest telecommunications operator. I caught up with the CEO to discuss the company's future and the prospect for any IPOs.
Overall, what we are doing is, so it's actually in the telecommunication industry, we are always going with the tariffs of 12 months. So we are just lagging a little bit behind. So because if you have like 12 months ago, you have your subscription, so we need to wait for the change on the pricing. So that's the reason that we believe in that we are just going to continue on inflationary pricing. And then at the end of the day, still, if you look at all the inflation, the telecommunication industry is well below the inflation rate. So we have still room to go.
So you still think that there's no sign of a slowdown at all in demand or price pressures?
Yeah, not at all.
As I say, orthodoxy is returning. We're looking at inflation rolling over. Does that mean that the window to IPO some of your business is now seriously open?
Yeah, definitely. So we have we have business in the different, for example, instant messaging app. We have a TV broadcasting app. We have a payment app. So we are looking for all the opportunities, but we are looking for the right time with the right price.
Okay, you've got three major businesses, as I understand, that you want to IPO: the towers business, the broadband business, and the fintech. Which of these is going to be the first and the easiest to get to market?
So actually, we are looking for all the opportunities. So to say the truth, that I'm not going to pick one of those. It's for me, all of them are so valuable. So I'm just going to look into all the opportunities, because currently around the world, the fintech is just also can be a possible option. But also, tower business is also so profitable, and it can be another option as well.
Do you think there's more appetite? If I look at the towers business, typically these will do better. They're much better cash generative, cash flow orientated businesses. So in order of priority, you say you won't pick one particular child that you like the most, but can we expect you to pull the trigger on one of these deals this year? Markets are trading strongly, capital markets are strong. Are you tempted to go this year on one of the businesses?
So again, we need to figure out the perfect timing. So the the inflation rate is going down, and then there's a huge appetite about the investments. So we are looking for we are checking the waters, and then we are going to figure out the best time and the best price. For example, the same thing happened for our Ukraine business. We figured out that we have to get out of the Ukraine, so that's the reason that we sold it to our Ukraine branch. So that's the reason that we are looking for the opportunities.
When you choose the timing, is it going to be an IPO in the Turkish market, or would you consider here in the US? Is there a real possibility the US could be on the table?
Yeah, of course. We are just looking at all the opportunities, but the main IPO is going to be mostly in Turkish markets, but we are looking for if possibilities in here as well.
You're interested in renewables, you're interested in data centers. If I said to you, the transformation or the next evolution for Turkcell under your tenure will be what? If you and I sit down in a couple of years, what is Turkcell going to be?
So actually, a data center business, we are just planning to make it bigger. And currently, I have 4 new next-generation data centers, and then I have more than 4,000 customers, local customers, that I'm providing them cloud services. So I can definitely tell that my data center business is going to grow bigger, and I have a huge appetite and ambitious targets with respect to.
So if it's 4 at the moment, what do you want to grow that to? What do you think the demand? Because that's ultimately going to come down to the AI usage in Turkey. So where can that go to? 4 to 8, and in what time frame? Just give me some parameters.
Of course. So the biggest problem with as you may know, that the data center business is the sustainable energy. So we need to figure out the first energy cost and sustainable energy sources. So that's the reason that after that you need to keep on growing on the data center numbers. So because of that, I am spending $240 million for 300 megawatts of solar energy farms in Turkey right now to provide a sustainable, renewable energy for my data centers. After it is over, I have more time and more appetite to invest more on the data centers.
The Turkcell CEO catching up with us yesterday. Coming up in the show, all eyes on the President Biden ahead of the NATO summit. That begins in Washington today. We'll break down Biden's effort to stop the infighting over his re-election campaign.
The bottom line here is that we're not going anywhere. I am not going anywhere. I wouldn't be running if I didn't absolutely believe that I am the best candidate to beat Donald Trump in 2024.
That was President Biden insisting he is staying in the race and that he is the best possible candidate to beat the former President Donald Trump to the White House. Let's get to our Brussels bureau chief. It is Kevin Whitelaw. Kevin, thanks for joining us. I mean, first of all, we have this NATO gathering. Is the gathering overshadowed by the politics of the United Kingdom, of France, and of, let's say, miniature chaos in the Democratic Party? Is it being subsumed? What will the chat be?
Yeah, I mean, I think everyone's going to be watching first Joe Biden. They'll be looking to see, how he's doing, how his health looks, how he's coping. Obviously, some of these leaders saw him in France recently for the D-Day celebrations. They saw a few saw things that worried them. So I do think there's going to be, everyone's eyes are going to be on him. Obviously, Emmanuel Macron comes from France, politically wounded, although maybe not quite as wounded as everyone at first thought he was going to be, but still in a pretty precarious position. Chancellor Olaf Scholz still also weak himself. And obviously, the strongest leader is suddenly the UK Prime Minister. That's kind of a shift from where it's been for a while. And everyone's going to want to get their moment with Keir Starmer.
For sure. I mean, look, if anyone understands the idea of momentum, it is Joe Biden, both positive and negative. And right now, there's a lot of negative momentum that he's tried to quell. You have 6 Democrats come out and publicly say they think that he shouldn't be the candidate. You have him do a media blitz on talk shows, on the campaign trail, basically anywhere they can get Biden, saying, I'm not backing down. Now we have the progressives of the Democratic Party, like Alexandria Ocasio-Cortez, coming out and supporting Biden. So has he done enough? Or does it at least seem like there is some turn in momentum, or is he still climbing a very steep hill?
I mean, I just don't see how he breaks out of this news sort of cycle, because at this point, every single moment he's out there, everyone's just essentially waiting for him to falter, waiting for him to fail in some fashion. And everyone's going to be looking for it and likely over-interpreting every little blip that comes out there. So, I mean, extremely hard for him to come out and do something that's going to sort of prove to one and all that he's actually just fine. And so it's going to be a long cycle for him with repeated attempts, repeated efforts, and repeated exposures to go out and show that that he's still fully with it and is really in control. Kind of hard to almost, we talk about often hard to prove a negative. In this case, it's actually going to be hard for him to prove the positive.
Well, look, for as long as there's chaos and infighting within the Democratic Party, and we've got ABC talking about a huddle of the Democrats this morning, that will happen at 9 a.m. And again, this is building on a video conference that Hakeem Jeffries coalesced on Sunday. So this is a building internal narrative within the Democratic Party. All Trump and the Republicans have got to do at the moment is do what they've done, which is remain relatively quiet. But of course, it's going to come down as well. Who does Trump pick as his vice president? And there are some names that are put out there as well. He's talking about a person that can do a fantastic job as president as well, and he hopes to announce it perhaps at the convention. So who's in the frame?
Well, we're looking at a couple of different senators, J.D. Vance, Marco Rubio from Florida, a couple of Doug Burgum, governors. So there's a handful of folks whose names are out there. I don't think anyone really knows what's in Trump's mind, and he does like to keep this kind of thing very close to the vest. Ultimately, it could well come down to simply sort of a gut pick for him. He's got to pick someone that he sort of trusts politically, but he's also going to want someone who's not going to really overshadow him, because ultimately, for Donald Trump, everything starts and ends with him, and so he's got to find that balance. He likes to make a splash. He, for all we know, he's going to, pick the name out of a hat for a day or two beforehand, and not tell anyone. For all we know, it's going to be a surprise to the pick.
Love the idea of picking a vice president the same way you pick who's going to be your secret Santa for the holidays. Kevin, thank you so much. Bloomberg's Kevin Whitelaw in Brussels, who of course has had a long history covering D.C. as well. Okay, let's turn to the other politics in France. Lawmakers are preparing for negotiations over the next government. Tracking it is Bloomberg's Caroline Conan, who is in Paris. Caroline, it's quite surprising, the scantness of what we've heard from President Macron. We really haven't heard a lot from him since the election. So what do we know about this debate, the horse trading that's happening behind the scenes of coalition building and the next prime minister?
You know, unlike Germany, France doesn't have at all this tradition of having a wide coalition. So that's something that is very difficult to picture politically in France. President Macron hasn't been seen, as you said, since Sunday's results. At the moment, you have 3 blocs in the National Assembly. He is likely to have to extend a hand to at least the center left in order to try and get some fragile majority in parliament. In the short term, he's asked Gabriel Attal, the current prime minister, to stay on to deal with current affairs. That could last for a few days, perhaps even a few weeks, given you have the Paris Olympics coming up on July 26th. So it would be kind of weird to change the government just a few days before, at least for security reasons, for continuity reasons. Now, in terms of who he could pick, you could have a few personalities from the center left. That's assuming that this alliance of the New Popular Front explodes and the far left is sidelined. You could see some personalities coming back, perhaps former President François Hollande, because you need someone who's experienced, who's skilled, who's consensual, and obviously you don't have that many of them on the left wing. A Green also would be a possibility. There is a Green leader. She's female. She's called Marine Tondelier. She's been named also as a possible prime minister. But you never know exactly where Macron is looking at. And some
so it's a broad field, Caroline, as you say, and the former prime minister himself, Gabriel Attal, he's coming up with things. He's talking about a broad political offering. It requires a bold move. Let's just talk about Marine Le Pen and in terms of what she's pivoting towards. So she's looking much more broadly within Europe to galvanize her position. She might not accede to power in France, but she is pivoting to Matteo Salvini to join Orban's far-right EU alliance. So this is about building for the next 4 years for her, isn't it?
Of course, because she was using this as a springboard for 2027 presidential elections in France, unless, of course, those elections happen before that. And as you know, the National Rally suffered a big setback in this runoff, only 140 seats, when just a few days ago we were talking about an outright majority for the far right. So she waited for one day to go and see Viktor Orban and say, we're going to join this Patriots for Europe new group in the EU Parliament. In fact, the National Rally is going to become the biggest party within that new group in the EU Parliament, along with Vox from Spain, along with Matteo Salvini. And clearly, this is very different from Giorgia Meloni, who is from a different group in the EU Parliament.
Well, Caroline, it's the coalition of the unwilling, one could say. This cohabitation could get very uncomfortable. Caroline Conan in Paris. Thank you for joining us. Context Matters on Bloomberg. Good morning from New York.
Let's get you set up for your trading day. Today, we're going to get numbers for small business optimism at 8 a.m. Eastern, so in just a few minutes. 10 a.m. Eastern, U.S. Treasury Secretary Yellen testifies to the House Financial Services Committee. Fed will deliver his semi-annual testimony to the Senate Banking Committee. And then at 9 a.m. Manus, we learned from ABC that the Democrats will be meeting behind closed doors. Will they have to check their cell phones? Just to give you an idea of the flavor of what the conversation will be about.
Yeah, that is going to be closed door, to say the least. And just to reflect on what Biden said, the party has spoken. The Democrat nominee is me.
Yeah, he's been really strong about it.